Yeah. I welcome you all to the 127th webinar of AASB of ICI. Over the last few months, under the guidance of our Chairman Shri Sanjeev Singhal and Vice Chairman Shri Vishal Doshi we have covered a wide range of industries. And today, we are going to discuss about auditing aspects related to audit and ancillary industry in India. I take this opportunity to thank Shri Sanjeev Singhal and Shri Anil Lal who gave me the opportunity to moderate today's webinar. Auto ancillary sector in India is huge not only in terms of the revenue that it generates, but also the number of people that it directly or indirectly impacts. Like any other sector, it has its own set of challenges in relation to audit, which we are going to discuss in detail today. We have with us two eminent speakers with a vast amount of experience who have worked closely with this sector for deliberating on the topic. I would like to introduce Sonika Burmanji, who will be taking the second session today. Sonika Burman is a partner with Pricewaterhouse Chartered Accountants LLP. She has spent over 19 years in the firm. She has extensive experience in auditing and financial reporting under India's IFRS, SOX, etc. She has catered to clients both unlisted and unlisted in distinct industries, including technology, retail and consumer, logistics, industrial products, and education. She has played a key role in driving transformation and innovation in audit. She believes in building a cohesive and inclusive work culture, delivering sustained outcomes, embracing innovation, and solving important problems. She's a member of the Institute of Chartered Accountants of India. She loves watching cricket and tennis and likes to travel. Now, I would like to invite C. Arushi Gupta to take the proceedings forward.
Welcome everyone to the webinar on key consideration in audit of auto ancillary sector. Today we have two guest speakers with us, and Sir has already introduced Sonika ma'am, and let me introduce all to the Pranay sir. Pranay sir is a practicing chartered accountant with enriching experience of more than 16 years. His professional journey of more than a decade and a half comprises of working in industrial and consumer product businesses encompassing companies in various industry sectors such as auto, diversified industrial products, retail, consumer products, healthcare, hospitality, and other manufacturing. He is currently a partner with chartered accountant firm based out in Delhi and actively participates in ICI initiatives. He is also a designated technical reviewer with FRRB. Can we invite Sir for speaking and enriching us with other things?
Yeah, thank you, Arushi. Thank you, Siddharth, for this opportunity today. And I'm accompanied by Sonika, and probably like we are together, we have been doing, like I've heard, more than I would say 30 years of experience sitting today with you all. And with this, I would try to bring out whatever experiences that we have gained in the auto industries and all the practical aspects around it. And we welcome the questions you may have, and we may try to answer as many of them at the in the middle of the presentations, or it may take at the end of the presentations. I'll just give me a moment. I'll just share the presentation with you all. And Arushi, just let me know if it is visible to you. And yeah. Arushi, is it visible?
Yeah, so it's visible.
Yes, sir.
Okay. So the agenda for today, in next 2 hours, will be covering. First, we'll understand what we actually mean by auto ancillary industry. We'll consider the auditing aspects around it, encompassing the materiality consideration, how we identify the risk of material misstatement in an auto ancillary industry, the significant classes of transactions specifically designed for an auto ancillary kind of a setup. Going forward, we'll take up a specific test of detail over the substantive procedures that are there that we conduct as an auditor in an auto ancillary industry, some key of the estimates, and also some of the reporting consideration, how others, big players in the industry are reporting, or the auditors of the big and companies in auto ancillary sector are reporting key audit matters in their report. So this is how we will structure our discussion today. The first four sections will be taken by me, and the rest of the sections will be taken by Sonika. I'll move forward from here. first understanding the auto ancillary sector. I'll just give me So this sector principally comprises of three subsets. One is the vehicle manufacturer. So the Tata, if you're Hyundai, Honda, Maruti, all these are OEMs, original equipment manufacturers. So one of the segment comes from an auto industry, is a original equipment manufacturer, the manufacturer of the cars or the motorcycles that is there. The second leg connected sector to this is the auto ancillary sector. So what happens in this is, you would have read of in the basic concept of inventory, wherein you have heard of just-in-time approach. So this industry functions in that sector, and most of the components are based on which a car is made or a motorcycle is made are supplied by the auto component manufacturer industries. And these are industries wherein they are manufacturing either of a specific part for a specific car manufacturer, or they might be supplying or manufacturing multiple parts to a single car manufacturer. And the third subset of this industry is the aftermarket. So what is aftermarket? Aftermarket is, once you buy a car, it goes out of the warranty, you go out in the market, if you want to change your headlights or any other part in your car, you'll have to go into the local markets, and that local market where you seek the products is called the aftermarket. So this is another big market wherein some of the players only service to this kind of a market. So principally, there are three subset of these industries, and within these three, if I focus only on auto ancillary sector, which we are focusing today, so these are some of the critical parts I've mentioned on my screens, which they supply to the original equipment manufacturer or the car manufacturer, the motorcycle manufacturers. So number one is the engine parts, the base, the heart of the car or the motorcycle, the transmission, the steering parts, suspension and braking systems, equipments, electrical parts, and there are numerous other things that goes into a car. So these are the principal things that an auto ancillary would be engaged in. There, like others, there's still a lot of things like tires would be there, antenna would be there would be switches going into the car, or you'll have seats also in the car. So there are a lot of each and every part you can think of would be manufactured by an auto ancillary, supplied to the OEM, or even to an aftermarket. And there are separate players or specific players who service only the aftermarket kind of a setup. I'll move forward. So I'm just giving you a brief first, just to set out the base what an auto ancillary would be. So while you may imagine, but just to have a from where I can bring my discussion or build my discussions today. So if I go further in the auto component, like I said, engine parts, there will be sub parts. And why I'm bringing this to you is just to give you a vision that it's not about engine would be supplied by one company. There would be some auto ancillary who are providing only a subset of engine part to a auto ancillary, and they again assembling it and supplying it to the car manufacturer. So it's a very, I would say, widely spread kind of a industry, and this is very unique setup also. Normally in other manufacturings you will see end-to-end manufacturing being done by the companies themselves, but in auto kind of a setup, because it's highly dependent, the structure is like that, each and every part is being made by a auto ancillary kind of a thing. So it's highly dispersed, I would say, and goes down to a single part that goes into the car. So for example, engine parts are there. It goes like pistons are there, piston rings are there, engine valves are there, fuel pumps, carburetor, there are bearings that are there. Similarly, if you go to the electric parts, switches are there, motors are there, spark plugs are there. So, and because I've been doing this industry for quite some time, there are companies who are servicing only a single part and having a decent turnover. So when you are auditing, you'll have to understand what they are doing, how this gets fitted into the ultimate ecosystem of the car. Similarly, driving transmissions, suspensions and the braking systems, equipments, and others. Like I said, there would be plastic parts, would be there, steel parts, castings would be there. There would be glass and rubber parts that would be supplied to by a auto ancillary to a car manufacturer. I was doing an audit of a company who was manufacturing only horns, and horns to few of the car manufacturers, and they have the plant specific to car horns only. So they are having only single product manufacturers. So you can imagine the kind of the vastness this industry has. And why this is important? So just to give, so whenever we do an audit, so you can relate that also. So whenever we start an audit, maybe it's a new audit or it's a new year in that same audit, we have to understand, first of all, the entire business in which the company operates. And that becomes the basis of our auditing the entire and auditing that company, including the planning will be doing around that audit, setting out our materiality, setting out our risk. So first of all, we need to understand the entire ecosystem in which the business operates. And when I say understanding a business within an auto ancillary industry, so it will be our understanding, our towards understanding how the business operates will be in all these factors. So if I go one by one, it says the entity's organizational structure, ownership, and governance. This is very important. We need to understand how the organization is structured, who owns the organization, how it is financed, who is governing, who on the governance board, the entity's business model. So when I say entity's business model, whether it's how it integrates the IT system, it's using SAP, it's using Oracle, or what are the software that it is using, what is the market to which it is servicing, whether it is an ancillary or it is servicing only to the aftermarket, or it is particularly they are supplying only to a single customer, or they are supplying to multiple customers but a single product. So we'll have to understand in which the company is operating, the entity's strategic direction, where they are headed. Are they quite stable kind of an organization, or they are quite aggressive in the market? They are doing a lot of acquisitions. So we'll have to understand from that perspective as well. Relevant industry, we are doing auto ancillary, so that will be there. The regulations which the entity needs to comply with. This again impacts our audit. The measures to assess the entity's financial performance. So this is again very, very important, because when we are auditing, we need to understand how the organization's performance has been in the past, what is the projections for the future, and whether are there any going concern challenges, is it adequately financed, is it profitable? All these factors will impact when we plan the audit, the procedures that we need to perform on that audit. Similarly, we will need to understand the financial reporting framework of the entity, whether it's on Ind AS or it's on the accounting standards, or it is we need to perform a group reporting. It might be a possibility, because in this kind of an industry, you will see a lot of, I would say, joint ventures or associates with a lot of foreign companies, maybe German or Japanese or Korean. So in that case, you need to understand whether we need to report as per international auditing standards, or as per the international accounting standards, IFRS. The nature and extent of the related party transaction, again, because of its vastness, like I said, so there might be a possibility that a company that you're auditing are also getting sourced from a lot of RPTs, related parties. A lot of parts might be supplied by their own promoter organizations or their sister concerns. So you need to understand the entire ecosystem in which the organization is operating, and this might impact your audit when you perform an audit, when you strategize the audit on that particular organization. The entity's ability to going concern, like we spoke earlier, we need to understand the overall financial ecosystem in which it is operating. And all these factors help you in planning and executing an effective risk-based audit. And when I say risk-based audit, once you understand the business, the factors that are influencing that business, how it is structured, how the regulations that are applicable onto the business, the financial reporting framework, all these will help you executing an effective identify risk around the audit that you will be performing, and devise adequate, I would say, procedures to obtain adequate evidences so that you are able to opine on those financial statements. Arushi, I'll take a pause on every slide. If there are questions, I'm happy to take. I'll move forward from here.
Sure, sir.
Okay, like we always say, we spend a lot of time in planning our audits, and that once our audits are planned well, I would say we are able to execute them effectively. And if I go further in understanding the industry, and the organization from where I come also, we spend a lot of time in understanding how the industry operates, and you'll see uh, it not only helps us design the procedures but also makes aware about how the industry is performing, and enables us to build expectations about the organization which we are auditing as well. So if the industry is growing at X percentage, our expectation around the auto ancillary industry as well would be to grow at that percentage. They might not grow because of they might be growing a different they may be following a different growth trajectory because they are more aggressive in the market doing acquisition and acquisitions, or making a inorganic kind of a growth. But we need to understand so that we are able to design our audit procedures accordingly. So if I see the automotive industry in India, on the left hand side, you will see the number of automobiles produced in India over these last 10 odd years. And if I see on the right hand side, these are the number of automobiles sold in India in millions. So these are production as well as sales numbers that you see. And if you see, pretty much in line, because this is how the growth has been. And if you see the period around 21, it has fallen because of the COVID era that was there. And it quite took some time for the industry to come out of the COVID. And last year was a tremendous year for automobile sector in India, and has seen a tremendous growth. And if you see Q1 forecast as well from there's a Society of Indian Automobile Manufacturers that is called the SIAM, and it's a robust growth in the Q1 as well. As far as this year is concerned, and they are projecting a good growth trajectory in this year, this financial year also. So if you see in FY24, almost 2 crore units of passenger vehicle, commercial vehicles, three-wheelers, two-wheelers were sold during the year. And if I see the new segment that is growing in automobile, the EV segment, and if you're auditing some of the auto ancillaries, you will see they are moving towards their base to some portion towards manufacturing of EV products as well, because this is giving a good amount of growth to their top lines. And if you see the last pointer on my slide, it says the CAGR of EV market in India until 2026 is expected to be at 36%. And similarly for EV battery is around 30%. So it has seen a tremendous growth and is expected to see a tremendous growth in the future. And when you are auditing, you will see a similar like of numbers on your clients as well. And it helps you build expectation and do understand your industries better. If I move forward, so now auto ancillary industry, like I said, they serve to both the car manufacturers as well as the aftermarket, or car manufacturers as well as two-wheeler manufacturers. Now, if I see the segments within which these auto ancillary operates, so they may not only have cars, so like they have two-wheelers, passenger vehicles, commercial vehicles, as well as three-wheelers. And if you see the composition on the left hand side, you'll see a lot of 75% is still two-wheelers, 17% is, or close to 18% is the passenger vehicles, which is the car. Commercial vehicles is close to 4%, that is basically your trucks, buses, etc. And three-wheelers is only 2.9%. So pretty, I would say, focused on your two-wheeler segment in India, because and it goes with the I would say the middle class that we have in India. So a lot of people still prefer to go own up a two-wheeler in India, and that is why the composition of the entire market still 75% is held by two-wheeler market in India. And if you see on the bottom right side, this is the share of the car manufacturers in India. So Maruti Suzuki leading the show from 40%, then Hyundai 14%, close to 14% against Tata. Mahindra is around 10%, Kia is around 5%. So this is how the entire, I would say, market is there. And this market has been growing consistently, like we said in the last slide, if you see. So this has been growing consistently over the years, and last year has been tremendous. So if you're auditing an auto ancillary kind of a setup, now you're able to understand and you're able to analyze your audits better. So we'll have to analyze by segmenting into two-wheelers, passenger vehicles, commercial vehicles, because they have their different risk and returns when you are auditing. Another thing that is quite interesting from an auto ancillary, because government has been promoting this industry quite, because this is one of the most, all the industries are important, but this is one of the industries where the government has its focus, and a lot of policy initiatives, a lot of from the support infrastructure perspective, government has been doing since last couple of years, and specifically under FAME scheme, that is basically to shift the I would say the towards the electric vehicles. So the government has specifically launched the FAME scheme. And if you see on the left-hand side, these are the policy support, wherein to increase the Make in India initiative, there is a scheme called Automotive Mission Plan 2026. There is any MMP 2020, which gives a huge, which gave a huge boost to the sector. Another thing has come up is a production linked incentive scheme in this sector, which is which has increased, which has brought in a lot of localization in the manufacturing. A lot of you'll see when you're auditing a lot of partnerships with global players that is happening in India these days, because people are bringing because of the PLI scheme that is there, production incentive scheme is there. They are incentivized to produce more in India, and they are setting up plants. They are bringing their manufacturing facilities from abroad to India to reap these benefits. Growing demand, again, because of the demographic structure of trajectory of our country, and the rising income, and the way the government is looking for us to be a developed economy by 2047. So from that perspective also, the demand has been growing, all this because of the rising income of the and the growing young population in India. And if I see on the right hand side, the support infrastructure and the investment that the government has done, apart from the FAME scheme that I've spoken about, there is electrical mobility promotion scheme that is already in place 2024 for all two-wheelers, three-wheelers, as well as three-wheelers, e-rickshaw in L5 categories. Recently, Ola Electric has also announced an IPO that would be, I would say, one of the first auto companies to go in India for an IPO in last 20 years. And it's expected to be around 8,500 crore rupees in IPO. It's quite large in size. Recently, Power Finance Corporation also approved a loan of 600 crores, and this is for 5,000 passenger EV and 1,000 cargo EVs. And these are particularly, if you guys are from Delhi, you would have seen Blue, that is upcoming, I would say, the cab service provider, and this is particularly for Blue. They have given to an entity which will ultimately lease out these cars to Blue. So this again is a new segment that is growing. In March 2023, central government sanctioned 800 crores on the FAME scheme, again to promote the new EVs in India. These are again, these are like I said, we have already discovered the production linked incentive schemes, automotive mission plan. This is again to boost the growth in the sectors. These are all around this. I've already touched on all these initiatives that the government is taking. So why are these important to understand? What are the initiatives that the government is taking? So when you are auditing, so your clients, if they are operating in this setup, so one here or there, they would be either they or their car manufacturer or the original equipment manufacturer, like I said, the bicycle, the motorcycle manufacturer, they would be covered by this incentive programs. And in turn, there will be a lot of I would say your involvement as an auditor by way of certifications, or maybe to understand what are the schemes, whether they are being accounted appropriately into the books of accounts. So your questions around to understand if there are schemes that needs to be accounted for, or there might be disclosures that may be going with the financial statement that you need to audit. You need to be aware of these are the programs that the government is running. These are the things that are happening new in the sector to help you design and again deliver an effective audit around this. I'll take a pause. If you have any questions, I'm happy to take.
You talked about the PLI scheme. So, what would be the nature of that subsidy? Would it be a revenue nature subsidy or a capital nature subsidy for an auto ancillary company? And what would be its implications under GST?
So production linked incentive scheme, how it operates is it will operate if you've read the scheme. So it will be dependent upon the increase the production the amount of production you have increased vis-a-vis the year that you have opted. So if you have, for example, you've opted as 2023 as your base year, and you were producing 100 at that point in time, and you are increasing your production from 100 to 115. So based on that, you will receive the benefit, and once you receive the benefit, you will account in the year when you are receiving the benefit, wherein you have complied with all the conditions that are precedent to the scheme. So this will on in the year of recognition will be recorded in the statement of profit and loss account as a revenue grant.
Okay, sir. Thank you. Please.
Yeah. Going ahead. So first, so when we start the audit, we understand the business in which the company is operating, and then we move forward and set out our materiality. So this may not be unique to auto ancillary industry, but when you are designing, because materiality needs to be designed for all the audits, but when you are designing materiality in an auto ancillary kind of a setup, you need to understand how the people who have invested in your business are focusing on the organization, whether they're focusing on the revenue growth at this point in time, or they are looking at the profits. So for example, if I talk about 2 years back, when we were struck by COVID, this industry was badly impacted because people were not buying cars, they were not buying two-wheelers at that point in time. And at that point in time, and for quite some time, I would say a year and a half, the focus of the investors in the business changed from earning the profits to bring the revenues back to the company. So the entire focus was on revenue. And similarly, from an auditing standpoint, also our base to set out the materiality shifted from profit before taxes, which is normally our starting base for a company, for any profitable company, to revenues at that point in time, because the entire focus of the investors or the stakeholders, I would say, in the business was to bring back the revenues that they lost during the COVID times. So first of all, whenever you are establishing materiality in auto ancillary industry, or for that matter, any industry, you need to identify the base on which you will calculate the materiality. It may be your earning-based measures like your profit or the gross margins or the EBITDA. You'll have to decide what is the focus of your stakeholders who have invested, who are impacted by your organization. And second, once you decide, or earning-based measure, and similarly, you may have, I would say, activity kind of measures, like you have revenues, or you may have total expenses, or when it's a startup kind of an organization, you may have equity or the net asset value at that point in time. You'll have to identify the base on which you need to calculate your materiality. This is the number one step in calculation of materiality. Once you decide this, the second step comes to assign the performance materiality, the calculate the overall materiality. So this overall materiality is at the financial statement level. So this will be an X percentage of your profit before tax or the revenues, whichever base you are taking. And once you calculate the overall materiality, you calculate the materiality at the account level, which is called the performance materiality. And then you calculate the nominal amount, which is at the transaction level. Again, these are all percentages calculated. So for example, materiality is an X percentage of your profit before tax or the revenues. Performance materiality will be an X percentage of your overall materiality. and the nominal amount, which is at the transaction level materiality, which will be a percentage again based on your overall materiality. Now, how these percentages are determined? So if I go one by one, so overall materiality, normally these are based on your past experience with the organization, the number of misstatements that they are having, or the number of entries that may go in your routine audit process, or maybe because of, is it a highly leveraged kind of an organization? Is it who owns this organization? What is the governance structure of this organization? Is the is your organization going public in few years? All these factors will determine the basis of your materiality. So, for example, you may take 0.5% of your PBT if your company is a listed organization. Sorry, 5% of your PBT if you're if it's a listed organization, or 0.5% as a revenue if it's listed, or maybe going listed in few years. So all these things, again, the percentages may not differ from industry to industry, but when you are considering, you have to consider the factors that are impacting those industry as of today, when you're calculating the materialities. And similarly, if you have heard of recent news, some of the European countries, because of the climate change, discontinued usage of the diesel vehicles. So all the auto ancillaries manufacturing diesel engine parts, or maybe parts that could be supplied to specifically to a diesel cars, will get impacted by these decisions, and their revenue will go down, their profits will go down. And again, when you're calculating the materialities, you'll have to factor all these all these events that are happening around, which are impacting your organization, which you are auditing. Okay, any questions till here, Arushi?
Yes, sir. So when we talk about choosing the base for materiality, so is it we should choose all, like you have listed the different benchmarks for choosing them. So we need to choose all of them, or we can choose any one and proceed with the audit.
Yeah. So, so whenever you are choosing base for calculating materiality, you'll have to understand how the people who are, I would say, what is an expectation of the users of the financial statements. So first of all, the expectation of people who have invested in the business. So who are the, you have to see who are the investors, promoters, or they might be a private equity firm that you have invested in the organization. So you have to understand how they are looking the business. They are either they are focusing on revenues, or they are focusing on profits. So like I gave you an example 2 years back. So these industry, normally you will see profitable industry, because they are they having normally they will sell at a margin. So you are not expecting these companies to go in losses because they are supplying to the car manufacturers. So the costings, the profit, the margins are already decided when they contract with and they supply to very limited number of manufacturers. And so from that perspective, normally these organizations were usually in profits. But when COVID struck, so they went, their fixed cost went up because the cars were not getting sold, and the entire industry, even the OEMs, were looking to bring back their revenue. So the focus shifted to revenue. So there might be, so you'll have to understand, if the focus is on profits, you'll take profits as your base to set out materiality. If your focus is on revenue, then you'll have revenues as a base.
So we need to keep in mind the situations also, the economical situations, and this every situations also. Okay, sir.
Yeah. So if I move forward, so we have understood the business, we have set it up materiality. Now the next step is to identify the things that might go wrong, the risk of material misstatement. What are the risks that might impact this industry? Why this is important? So if you understand, so what we are doing is, till now we are just doing the planning phase of our audit, and we are planning. So we have to give adequate weightage to the things that might impact the business, because these are the things that might drive some of the I would say transactions that the company is undertaking. So I tried to so this slide, I have tried to build in all these scenarios based on my experience, which I've seen, which might get based on which impact on auto ancillary industries, and based on, once you understand these factors, you'll have to you can relate it how it will impact your audit as well, and wherein you need to focus more, and wherein you need to design additional, I would say, audit procedures around it. So, for example, and these might be all kind of risk. This might be business risk, wherein you may not be able to do something today, but from an auditing standpoint, may not be impacting. But you should be aware of all these risks that might be there. These are operational kind of risk, I would say. There might be inherent risk wherein you need to identify the accounts which might get impacted. What are the procedures that you need to identify around these risks? And if I give you some flavors around it, so for example, one of the risks in this industry is that you are dependent on a limited number of vehicle manufacturers. So once you audit, or I'm sure there would be people who are auditing auto ancillary in today's audience. So if you have seen, there would be typically a few car manufacturers or two-wheeler manufacturers as your customers when you're auditing, and this increase high dependency on these manufacturers. If one of those goes bad, the entire setup that you would have set it for them to manufacture particular parts for them may get impacted till the time you get a new customers. So you'll have to keep in mind either whether they are diversified or they are dependent only on single customer, that too on a particular single car that is there or a particular bike that is there. So it might increase in audit risk from that perspective if that vehicle does not have a good performance in the market or is not performing well in the market. So indirectly it will impact your business as well. Similarly, because it's a quite capital intensive kind of business, so whether you have adequate capital resources to meet the production capacities of the manufacturer, so it quite often happens. So for your example, you have OEM has launched, or Tata has launched, or has a new car, and based on the expectation, they build capacities with their auto ancillary. But fortunately, their car got a good acceptance in the market, a lot of demand in the market. Then once to fulfill that demand, there would be increased orders from Tata to the auto ancillary. Now, to fulfill this order, they may not have adequate capacities with them now, because they have set it up only for Tata, or they may be manufacturing for other. They have committed, I would say, lines for other manufacturers. So they will have to juggle up or may look for tier 2, tier 3 suppliers who can supply to them, and they can supply to OEMs. So these challenges comes. You need to keep all these things in mind. Depleted talent pools. This is typically with all the companies. Failure or certain fragile tier 1, tier 2, tier 3 component suppliers. So while I said there would be an OEM, there would be an auto ancillary, this chain does not end here. So it goes down to tier 2, tier 3, tier 4 component suppliers, because again, the industry is so vast. There are many, I would say, auto ancillaries in the entire value chain to just manufacture single product. Or maybe if I talk about, for example, somebody is doing a handlebar for Bajaj Auto. So to manufacture that handlebar, he will have almost 10 to 12 auto component suppliers. So if the chain goes down, and within those 10 to 12 suppliers, they might have further 10 to 12 suppliers to supply them parts. So if one of those component supplier is not able to produce, or not able to produce the desired quality, the entire chain gets impacted. And because they follow a just-in-time inventory approach, this will disrupt the production at the OEM level as well. So you can see how it's well knitted this industry is. One of the supply chain goes bad, the entire production gets halted at the OEM, and it's quite a ruckus. So you need to discuss all these things. Are there any events during this period, or how they are structured? What are the mitigations or the controls, or they have in place? Difficulty in passing the price reduction by the OEMs to the upstream suppliers. So this is a big risk in this industry. So what happens is, if you see, a lot of commodities goes into the manufacture of a car, maybe steel, aluminum, rubber, a lot of components are there. Now, when the auto ancillary produces this product, so they take when they fix the rate with the OEMs, so they fix a rate at a particular point in time, and at a particular rate that was prevalent at that point in time for all these commodities. But when they actually manufacture these products, the price may have gone up or down. It may go up as well as down. So all these burdens of increased prices have to be passed on to the OEMs. Now, OEMs may agree, may not agree with them. So you'll have to understand with them what are the arrangements with the customers. Have there any significant fluctuations during the quarter or the year which you are auditing or reviewing, and accordingly build adequate audit procedures around those stuff. And you'll see this quite often. And Sonika she has also been auditing all these companies. So this is the most, I would say, most impact. This is the thing that most impacts from an accounting standpoint to an auto ancillary. Similarly, the second is this linked one, the difficulty in passing the raw material price increase. This could lead to declining margins that might be there. Poor relations with the labor unions. These are again, these are the risks that might be there in other industries as well. But you need to understand and discuss this, factor in your auditing strategies. Last is vehicle manufacturers are increasingly again some you'll so what happens is if Tata or Maruti for that time for that sake is coming up with a new car or a new motorcycle or a three-wheeler or a truck, they will go back to their suppliers, that is the auto ancillary, to do some kind of an R&D for them. How the, for example, light is there, or maybe tail light or a headlight is there, how they should look like, and they get these investments done from suppliers only. They have, and you'll be surprised to know that auto ancillary industry also have their lot of have a good setup on R&D side. They have got technical engineers and they have a separate department that does all these things. Now, once they invest on all these things, so how this recovery of this cost will come? This quite often is one of the key, I would say, risk area, whether they have already arranged with the OEM, whether they will be adequately reimbursed for the cost they have incurred. What about the tools that they have already bought for a particular car, whether they will sell it back to the OEMs, or this will be a fixed asset kind of a thing for them, and this will be an investment kind for them. How will they be compensated for this? So all these things, when they happen, and normally you'll see whenever a new car is coming or a new model is coming, these costs will be there, and the accounting treatment of these costs depends upon what are the arrangements with the customer. So you need to focus on these kinds of arrangements whenever you see on your clients. Similarly, there might be cases where again, these are quite similar what we discussed in the previous slide. But if I talk about specifically of the warranty, so liability, who will bear the liability? So of warranty repair. So you would have seen now in India as well, there is a lot of product recall that happens. Now, once a recall is made by the OEM, this recall will go back to the auto ancillary who would have manufactured the part because of which the recall happened. Now, this recall accounting, again, this auto ancillary may not have done it themselves. They would have gone to tier 2, tier 3 suppliers. They would have gone down. So it's a again, it will flow down to the level based on which the component supplier who would have ultimately manufactured that part, but an entire chain gets impacted because everybody will have to borne the recall expenses that would be there. And to estimate a recall expenses is quite tremendous, and I would say complex in that case, because you'll have to estimate the number of cars or the bicycle in which the product has already been installed, how many have sold, where are they? You'll have to bring back those cars to the service center, change the part. There would be labor cost, and there would be the part cost as well. There would be, you'll have to make sure that all the cars or the motorcycle gets changed. So you'll have a communication that will flow to all the customers. So it's a quite a tedious process, and very difficult to estimate the product recall cost. And these are now quite frequently happening in India as well. So you'll have to be vigilant around this. And when you see, if you see my slide on the right hand side, I've mentioned when I see trade receivable B, inventories B, revenues, and these are the account assumptions that might get impacted: valuations, measurement, the completeness, existence. Also, you need to take into consideration whenever which are the accounts, what are the particular assertions that will get impacted, and what are the procedures that I need to perform around those assertions. Yeah, these are similar to what we already discussed. Another thing, I'll take one of the points in this is a global expansion. You'll see a lot of auto ancillary will have widespread global operations as well. Now, whenever these kind of operations are there, they might be serving to global car manufacturers, the motorcycle manufacturers, and they will have different, I would say, operational challenges, cultural challenges, as well as all the countries will bring in a lot of new regulatory challenges as well, and they will have a different risk and return. So you have to understand whenever you're signing the standalone as well as the consolidated financial statements in which these businesses are housed. Are there any impairment triggers? Are there any cars that have gone bad, or there might be labor challenges at some of the like I remember in recently when COVID struck, after there were significant changes in labor laws in European countries, specifically in Spain, and they have to incur a lot of cost if they were bringing the laborers beyond a particular number of hours that they were there, or they were making them work on beyond a particular number of hours in a particular week. So a lot of cost accruals happened at that point in time. So you need to be aware, and you need to understand again from the client what are the factors that are impacting their global businesses as well from that perspective. So just to recap, I'll take a pause. I'll recap. We have understood the business, the factors that are affecting the business. Then we went ahead and understood how to set up our materiality. What are the factors that might impact an auto ancillary kind of an industry? Then we understood the risk that might be there in this industry, and based on those risks, we have identified the accounts that might get impacted. Now, once we have understood this, we understand the process through which accounting transaction gets booked, and we try to map all these risks to my processes. And then the next section, when you go with Sonika, so that she'll discuss about what are the procedures that we need to plan and perform in an auto ancillary kind of an industry. I'll take a pause here. Arushi, if there are any questions, I'm happy to answer.
Sir, as of now, I don't have questions. I've understood.
Okay. So I'll move forward with respect to the significant class of transactions. So this is how typically a process functions. So there are 4-step process: initiation, recording, processing, and reporting. So, and within this process, if you see, we started from the prior year end, the accounting transaction gets booked through this yellow part, wherein there is the transaction will get started by, for example, a purchase is being done by a PO, then it gets recorded, then it gets then the GRN, IR, GR, IR happens, and then it gets reported in the financial statement, and you get inventory in the if it has not been consumed, you get inventory in a balance sheet of the period that you're auditing. And if you see on the income statement side, you have got 4 assertions. Assertions being simple. These are the representation of the balance sheet the client has given to you, that occurrence, completeness, measurement. It has occurred in the correct period. It is complete. The transactions are complete. It is valued appropriately. It is disclosed appropriately. And similarly, on the balance sheet side, the asset is existing. The assets or liabilities are complete, again valued appropriately. Company has a right and obligation to pay the liabilities. And they have been disclosed appropriately in the financial statements. So you have to understand all these processes when you are understanding how the accounting gets done in an auto ancillary industry. And if I talk about significant processes, so typically my experience is these are the significant processes or the class of transaction, what we say normally is are there, wherein you would have a disbursement, cashing and disbursement would be there, receipts would be there. There would be sales to the account receivable, the entire sales process, procure to pay process, the pricing provision, like I said earlier in my slides as well. This is one of the key I would say, frequent things that happen and quite challenging things that happen, because you'll have to estimate how much you will be able to recover from your customer, what are the discussions, have they raised the POs for those or not. Inventory costing, cost of sales will be there, purchase of property, plant and equipment, payroll, financial statement, close process. Estimation of warranties again becomes very, very important because of the product recalls that are happening. Like I said, it becomes a very tedious task to estimate what would be a product recall cost. So typically these are the processes, and you need to understand how these processes function in this chain, how the transaction gets started, recorded, processed, and reported in the financial statements. And once you understand, you will be able to map all the risks that we have discussed in the previous slide to all these the accounts as well as the assertions that are getting impacted. And again, through this process only, through which the transactions are generating. So, for example, just on your screen, if you are able to see, so when you understand the process, so this is typically the risk that might be there. I try to map the risk that we discussed earlier into the things that might go wrong and the controls that are there laid by the organization. So, for example, all shipments are not recorded in the proper period. So there would be nowadays, because of the IT systems in place, the applications are configured to so that the system date, nobody changes the system date, and it takes as a default rate the day. So it's always real time, real dated. Before processing sales order review to determine when ownership passes. Reconciliation of goods shipped is performed monthly. Revenue and margins by product and customers are reviewed. Sales agreements are reviewed. Subsidiary ledgers are automatically updated upon shipment. So your stock ledgers, your sales ledger, everything gets updated. So these are the controls that, and most of them you will see will be an IT controls in this environment. So you'll have to understand, again, this recapping, you'll have to understand the business, setting out the materiality, identifying the risk that might be there, mapping it to the account captions or the assertions that are there, then move ahead and identify the processes that are there from an accounting standpoint. And within those processes, try to understand the risk, try to map the risk that you have identified, and build on the adequate audit procedures around those risks. I'll take a pause here. And Arushi, let me know if there are any questions.
Sure, sir.
What is the industry standard for warranties, which is generally accounted for in the books of accounts? Can you give us a ballpark figure?
I do not understand the question about the ballpark figure, but if you
I mean, the warranty outflow, I mean, how much is it generally for an auto ancillary company? How much would be the outflow, and how do they estimate it?
So it depends. So generally, how it functions is you'll have to see the trends first of all on the past. Normally, they obtain a trend of what I've seen is 3 to 5 years. What is the warranty cost would be, and whatever the percentage on the sales that is there, they accrue in their books of accounts. So normally, this percentages will not come large, but whenever there's a product recall kind of a thing, at that point in time the cost becomes quite huge, and these kind of events you cannot anticipate in advance. So this cost will come whenever this kind of event happens. Normal routine warranty expenses will be based on the past trends that will be there. I hope I'm able to answer your question.
Yes, yes, yes.
So I will hand it over to Sonika from this section onwards. Sonika.
Yeah. Thank you. Maybe Pranay, if you can stop sharing.
Yeah, I'll do that.
Thank you very much. Siddharth, Arushi, can you see my slides?
No, ma'am. Still, Pranay sir's video is there. Pranay sir, kindly stop sharing your video.
I've stopped. I can see Sonika's screen.
Yeah. You can see, right?
Yeah, I can see.
And the slides are moving, right?
Yeah,
It's
slides are
visible.
moving.
You know it's visible. Vinu, Solanki, it's visible? Arushi, it's visible? Fine, fine, fine. Please, ma'am. Thank you
Thank
so
you.
much for giving your kind consent to deliberate on this topic. So you are requested to please kindly deliberate. Over to you, madam.
Thank you. Thank you very much. So, good evening, everyone, and thank you, Pranay, for setting the context. I think, Pranay has already given a background on auto ancillary audits as to, how we need to understand about the auto ancillary industry overall, about specifics about the company, how we will determine materiality, we will understand the specific risks of material misstatement, because the entire setting the context in the audit will depend on the understanding of the risk of material misstatement and mapping of the assertions to the specific risks. After that is done, and we've mapped the assertions to the risk of material misstatement, then the audit of that particular company starts. So, although we have spoken about the mapping of controls to the risk and understanding the process, but in this session, we will not specifically cover about the testing of controls. Having said that, as part of internal financial controls audit, basically we will have to do a walkthrough wherein we will have to do a design evaluation of the process, and we will have to test the operating effectiveness of the controls also. So the risk of control matrix which Pranay had shared. So there, obviously we will apply the specific guidance on IFC, and we will test that. Now, in terms of section 5, I will cover some specific illustrative substantive procedures that we can adopt in a audit of a auto ancillary industry. So just a word of caution, these are only illustrative substantive procedures and not an exhaustive set of procedures. We will cover some key financial statement line items which are specific to a auto ancillary industry. So the first thing which I will start with is impairment testing. So again, it depends on year to year. Like, for example, during the COVID period, the sales of the ancillary industry were impacted, and so was profitability. Having said that, that can happen in any year. Although like FY24 was a very good year, Q1 forecasts are very good, but the impact on the industry can be anytime. And the other big thing is technology shifts. So, as we know that there is a shift to electric vehicles. So, from that perspective, one will have to see that, how is the company adapting to those changes. And many OEMs and auto ancillary industries, they need to accordingly see on an annual basis if there are any impairment triggers as per Ind AS 36. And once there is an impairment trigger, then obviously there has to be a annual testing of impairment, and that has to be done at the lowest level of identifiable cash flows, which is commonly called a cash generating unit. And one should consider need for differentiation by, for example, geography, product line, model, etc. Once the impairment testing has been performed. And as auditors, we will also have to engage experts, because there can be some complex assumptions which can be used by the auto ancillary industry for impairment assessment. So we may not be the relevant experts for testing that. So we will have to engage the experts. And we will also have to perform sensitivity analysis, because there can be some complex assumptions which, if change, then accordingly, that can result in impairment. So, although we may see that there is a sufficient headroom, but if there are changes in assumptions, then that can lead to an impairment charge. So accordingly, sensitivity analysis as part of impairment testing is very, very important. And to conclude that there is no impairment, then one has to see that there is sufficient headroom after sensitivity analysis as well. So that will be one of the key aspects from a substantive testing procedures in an auto ancillary industry. Moving on, the other important aspect can be inventory. Again, connected with all the technology changes, for example, which are happening globally in terms of the entire, the go green environment, etc. There are changes in terms of emission norms, etc. So, and that is happening in India also. So one has to see that how is the auto ancillary industry adapting to those changes, and if there are any inventories which are unusable and which may not be sold or slow moving. So one will have to see that those are adequately being provided for, and to see and take comfort on that, one can see the analysis at the industry level, or from a competition perspective as well, that how is the inventory holding period, etc., comparable with the competition. And if there are any complex assumptions here as well, then accordingly, as auditors, one should engage experts, because it depends on the complexity of the model. And again, similar to impairment of property, plant, and equipment, one should perform sensitivity analysis so as to see that there is enough headroom when we are concluding that provision is adequate. So, from that perspective, one needs to be careful, and one can do a look back analysis for that specific company also, that what is the past trend, or if there are any specific situations, then how is the industry catering to that particular situation. Then the other important element is basically the fact that OEMs, as we know, are largely dependent on the auto ancillaries for supply of materials. So Pranay covered that when he spoke about the entire structure and understanding of the auto ancillary industry. But with the entire pricing pressure, there can be the fact that OEMs enter into contracts with the auto ancillaries for price reduction. So as auditors, we will have to look at those specific agreements. We will have to see that how are the auto ancillaries ensuring appropriate provisions being made for those cost reductions. And we will have to see that the fact that settlements are being made, so that there is no accumulation. And also we can also perform procedures like obtaining confirmations, communications, account reconciliations, to be able to get comfort on the completeness. And we can look at the overall aging of the accruals, and also the timely settlements, so as to ensure that there are no aged accruals. If there are aged accruals, then we can accordingly obtain management comments from the auto ancillary management to understand that what is the expected settlement period. And if we are not comfortable, then we can accordingly have a discussion on the provisioning for those aged accruals. Then the other thing is, the entire price variation which is given to customers. So what we can do as part of our inquiry procedures during the audit, we do inquiries with some people outside of finance function also. So it's very, very important in auto ancillary audit that we do the discussion with sales and marketing people, so as to be able to understand that whether there are any discussions with key customers with respect to things like any quality related claims, any efficiency discounts, volume discounts, any price settlements, and any other such discussions being done with key customers. We can, to be able to take comfort, we will obviously not rely only on inquiry procedures, but once we get details, then we will have to accordingly verify the underlying documents also, so as to be able to take comfort on the entire estimates working. We will understand the basis of the provision estimates being made by the auto ancillary company. We will see the subsequent settlement details, and we will also, and we should discuss with the in-house legal counsel to understand that if there are any ongoing disputes with the customers with respect to any of such claims or price settlements. Similar to the other accruals, we should look at the aging of the long outstanding receivables, if there are any. Then we should understand the reasons for the long outstanding receivables. We should see that adequate provisions are being made or there are subsequent settlements. And we should analyze the past trend of the accruals and subsequent settlements to be able to take comfort on management comments, when they give us comments about the expected settlements. uh, Having said that, we should also look at the appropriate accounting treatment, that, the fact that this is being done in accordance with the relevant financial reporting framework, whether Ind AS or if it is a group reporting engagement, IFRS, then, or any other financial reporting framework as applicable to the auto ancillary company. And if there are any significant changes in the actual results versus budgeted numbers, then accordingly we should have a discussion with the management and understand the reasons for that, and substantiate that with the relevant documents. Maybe I will cover the entire section on substantive procedures, and then I will take questions on this section if that's fine. The other important element with respect to pricing provisions can be, the entire government initiatives. So Pranay briefly alluded to that while covering the initial slides. So there can be very many government initiatives which can impact auto ancillary companies in India. And the very fact that we should be having a detailed understanding of the initiatives is very important, because we will have to see that, how are the auto ancillary companies accounting for the relevant government incentives which are applicable to the company in the financial statements. So we should obtain the scheme, for example, the MOU document, to understand the terms and conditions. Like Siddharth asked about the fact that, whether the accounting should be as a capital grant or a revenue grant. So that will determine, the terms and conditions will determine whether how will the accounting be done by the management of the auto ancillary company. So it is very important for us to understand the detailed terms and conditions, and to be able to take comfort on the entire mathematical calculation which has been done by the company of the benefit which the company will get from that particular government incentive, and the recoverability of that particular receivable which the company would have recorded in the financial statements. So one should see the subsequent settlement details, because if there is no movement in the receivable, then that puts into question the recoverability. And one should also see the filings done by the management with respect to the government incentives. Like there can be certification requirements. For example, we did the PLI certifications for some of our clients. There can be other certifications to be able to take comfort, on the entire receivable. And also we should understand that if there are any correspondences with the government or the statutory authorities between the auto ancillary company and the government, to be able to ascertain the reasonable certainty of the claim being received. And very important element will be the entire disclosures to be made in the financial statements. So one should see that management is disclosing all the details. So the entire total receivable, whether it is a capital grant or a revenue grant, then all the relevant financial statement line items getting impacted. The other thing is that when is the grant period? So when is it completely receivable? And any other significant updates with respect to that particular government incentive should also be made by the auto ancillary company in the financial statements. So as auditors, we should ensure that all these adequate disclosures are being made in the financial statements with respect to government subsidies and incentives. A very, very important element which will be there for relevant for auto ancillary companies will be the entire discussion around accounting for tooling. And accounting for tooling, it depends upon the whether the tooling is owned or reimbursable from the customer. And if tooling costs, for example, are recovered through piece price, then, as auditors, we should, for example, perform the following procedures. Like we will see the reimbursement agreements. Why is that important? It is important because the amounts capitalized should not exceed the amounts which are outlined in the reimbursement agreement. And one can recalculate the capitalized costs to take comfort on reasonableness. That is, how one can do that is that, one can validate that the remaining amount which is remaining to be capitalized are recoverable based on projected volumes. And projected volumes, one can take comfort on basis external sources, for example, and obviously, past trend by doing look back procedures and validating the relevant documents available within the auto ancillary company. And obviously, we will not do only recalculations and look back procedures. We will also do testing of samples. And we will see that, we will compare costs which are capitalized with the actual reimbursements. And if there are any significant deviations, then we should understand the reasons for those significant deviations. And if we are not comfortable with the reasons provided, then we will have to extend our samples to so as to be able to cover more programs. And this was a very, very important element to be able to get comfortable with the management's estimates. There can be a situation where there can be a gain or a loss. So gain can be where the reimbursement is more than the supplier's cost, which the supplier incurs to design or build the tool. So that can be a gain situation. So and then vice versa can be a loss situation. So one has to accordingly ensure that, one has to obtain the working of the gain or the loss and validate the working with the underlying documents. And that can be done by way of recalculation also. And one should ensure that the auto ancillary company is appropriately accounting for that gain or loss in the books. The other important element to take comfort on the forecasted cost to complete, again, with respect to the accounting for tooling, can be that, one can obtain a list of all the customer-owned tooling programs which are currently in process or will be completed during the current year. And then one can select samples and to be able to take comfort on the management's assertion that those will be completed during the current year. One can do look back procedures again, that what is the past trend of companies forecast vis-a-vis actual. And then basis that, if we do not see any significant variations, then, we can accordingly place reliance on the management's estimates. That is the forecasting process. And also, we will review the cost to complete, if it is in excess of amounts contractually guaranteed for reimbursements, then, that will be a loss situation. So if there is a loss situation, then one should accordingly take comfort that it has been appropriately accounted for by the auto ancillary management in the books of accounts. And people who audit the auto ancillary industry are aware that, one has to determine the appropriate disclosures of the tooling cost in the financial statements. So whether it is a property, plant, equipment, or whether it is inventory, it depends on who owns the tooling. So whether it is the producer or whether it is a subcontractor, and then the entire accounting determines upon the ownership of the tooling. And thereafter, if it is PP&E, then appropriately it has to be depreciated. And if it is inventory, then one has to ensure that the cost comes in the books when the revenue comes in the books. So there has to be a matching concept for that. And accordingly, one will have to ensure that the auto ancillary management is making the necessary disclosures in the financial statements, and the accounting being done by them is in accordance with the accounting policies. If it is a group reporting, then it can be the group reporting, the group manual which the company is following. And as auditors, we need to ensure compliance with the relevant financial reporting framework. I will continue with another key element which is relevant in the audit of auto ancillary companies. That is the entire development cost. So there is a lot of development which takes place. For example, if there are changes in technology, then there is a research phase, and then there is a development phase in every new technology that comes in. And one has to assess the appropriateness of capitalization of the development cost in accordance with the relevant financial reporting framework, in accordance, for example, with Ind AS. There are factors to be seen by us as auditors. For example, we should see that what is the technical feasibility of completing the intangible asset. The fact that the company has the intention to complete the intangible asset and make it usable or sell it. The company's ability that the intangible asset will generate future economic benefits. That is a very, very important factor when we are evaluating whether the development cost should be capitalized. Then we should also see that there is adequate technical, financial, other resources which are available to enable the auto ancillary company to be able to complete the development and to make the intangible asset ready for use or sale. The other important element will be that the company should be able to measure reliably the expenditures attributable to intangible asset during its development phase. Because if the expenditure is not measurable, then again, the question of capitalization becomes a challenge. And one should also understand that how is the management defining milestones to be able to analyze that, when does the development phase stop, and so that, then they can accordingly end the capitalization. Because once the development cycle stops and the support phase starts, then accordingly the capitalization should end. So that will be also one of the important considerations which we should also understand as auditors while we are auditing the development cost. Then, continuing with development costs, we can, for example, when we are testing the capitalization of development costs, if there is labor and overhead costs which are capitalized, then we can accordingly look at past trend. For example, we can look at rate per hour, and we can see the past trend of rate per hour. If there is a significant skewed rate per hour, then we can accordingly question the management if it is not making sense, and that is how we can take comfort on the reasonableness of the capitalized labor and overhead. And we can also do substantive testing for the additions, so we can accordingly test that with the underlying documents, for example invoice, other documents which are available. And we can accordingly ensure that the working is complete and accurate. And we can, when the management is sharing estimates with us, that by when will they expect to complete the program, then we can do again a look back and see that what has been their past run rate of completion of programs. And if there has been again no significant deviation from that in the past, then accordingly we can take comfort on the management's forecast for the current year. So once we have tested the capitalization of development cost, then the other part of the entire intangible assets is impairment test. So impairment test, I briefly alluded to that at the beginning. Here we have to see that if there are any indicators of impairment, then we have to accordingly ensure that management has done the entire impairment assessment. We should obtain the impairment assessment, see that it has been done at the relevant level of cash generating unit. We will accordingly again involve experts if there are complex assumptions and estimates involved. And we can accordingly ensure the completeness and accuracy of the impairment working. And once we have tested the impairment, we should also ensure that relevant disclosures are being made by the management in the financial statements, alongside the impairment. If there's a trigger, then they will also have to disclose the what has been considered as a CGU, and then what has been the impairment, and all the relevant details in accordance with the relevant financial reporting framework being adopted by the company. Now, the other key element of property, plant, and equipment and will be depreciation assumptions. So again, property, plant, and equipment is a very key element of auto ancillary companies. So we should obtain details of the property, plant, equipment by the production facility. If that should be available with the automatic ancillary management. And then we should accordingly understand the useful lives, and the depreciation methods being used by the management for those property, plant, and equipment. And so that, then once we do that, we should ensure that those are in accordance, for example, with Schedule 2, or if they are deviating from Schedule 2, then there is a technical evaluation done by the company, and it is in accordance with the accounting policies of the company. If there are any changes in accounting policies, then accordingly we should understand the reasons. And again, a technical evaluation should be done by the management. And then thereafter, once that is done, once we are comfortable with the useful life and the depreciation method, then we should assess the reasonableness of the depreciation expense, and ensure that it is appropriately accounted for in the financial statements by the auto ancillary company's management. So Pranay had briefly alluded to the fact that in auto ancillary companies, a very common aspect is product recalls and warranty. And I think Siddharth also had a question around warranty. So obviously, warranty expense, it depends on if there are product recalls, then accordingly the expense and the provision goes up. So it is not something which is can be like to like on a year-on-year basis. So one should accordingly understand that what is the list of warranty and all the recall obligations which the auto ancillary company has to its customers. And then once that is done, then the audit procedure starts by assessing the reasonableness. So again, one looks at a historical data. There can be unique specific situations applicable to that particular year. For example, any quality issues, any product recall specific to that year. So one will have to accordingly see the relevant underlying documentation. For warranty, for example, one will have to see the warranty agreements that to understand that what is the length of the warranty period. And accordingly, by seeing the underlying data, look back procedures, specific facts relevant for the specific year, then one can take comfort on the completeness and accuracy of the warranty provision being made by the company. And on a sample basis, we will also test the warranty claims and product recall claims by inspecting the supporting documentation. And sampling, obviously, when I refer to sampling, it can be target testing, non-statistical sampling. So depending on materiality thresholds, one will have to determine the appropriate sample sizes. And one can also test the completeness and accuracy of, for example, the volumes used by the company in calculating the warranty and product recalls to the sales register. So that will be another important element which one can perform. And the other key element which, as auditors, one can do on the warranty and the product recall provisions is sensitivity. So, sensitivity analysis can include analyzing based on historical claims, but sensitivity also includes, for example, analyzing the time lag of claims. So, claim date to or warranty start date, for example. So these are only some of the examples of sensitivity, but one can look at various alternatives depending upon the assumptions being used by the management, and then accordingly ensure appropriate sensitivity of assumptions to be able to take comfort on the adequacy of provisions. Couple of more slides on substantive procedures, and then I will take a pause. So the other important element will be the purchase contracts. So purchase contracts, one should ensure the complete list of the purchase contracts, and then one should look at what are the key provisions of these contracts, and obviously that cannot be done on a 100% basis, but obviously we can look at the key contracts when we are looking at the key terms and provisions. And then basis that we can ensure that those are being appropriately recorded in the books, and also take comfort on disclosures that are required to be made in the financial statements. And we will also take comfort on the fact that depending on the terms of the purchase contracts, uh, if the purchase prices are required to be updated, then we should ensure on a sample basis that those have been done. And if any additional rebates, for example, are to be received, then we should take comfort that those are being appropriately accounted for while determining the inventory valuation. Then the auto ancillary company's management has done appropriate accounting of that in the books of accounts. Then another key element will be the compliance with the legislations. And in India, there are so many legislations which auto ancillary company will need to comply for. So there can be, direct taxes, indirect taxes, which they can be subjected to. And, we should have a meeting with the legal head, with the tax head, understand if there are any specific industry-wide issues which are relevant for the specific company that we are auditing. And we should also understand the management's assessment of possible implication of the industry-wide tax issue on the company. And then we should understand that if there are any communications which they have received with respect to the same from the authorities. And once we have done that, then we can accordingly evaluate if we need to involve any internal experts, because as auditors, we may need help in terms of tax experts getting involved, or any other specific legislation experts who may need to be involved to evaluate the impact of the legislation on the company, and to be able to take comfort on the management's assessment. And once we have done that, then we can accordingly take comfort of appropriate recording by the company. So, if it is more likely than not that it will not impact the company, then obviously no provision is required. Or we will have to assess that if a contingent liability disclosure is required. So one can accordingly ensure all of that being done in accordance with Ind AS or the relevant financial reporting framework. And the last thing with respect to substantive procedures is last but not the least is revenue. So revenue is, in most companies is a significant risk, and one will have to determine that which assertion is a significant risk. Generally, cutoff, we have seen basis our experience that cutoff is the area of significant risk. And accordingly, to be auditing cutoff, one should obtain the complete sales register. And here I have stated 2 months, but it will depend upon the lead time. Lead time, will depend upon from the factory gate to the customer, how much time does it take for the product to reach. And accordingly, once the lead time is determined, then we will have to accordingly test cutoff transactions by tracing those to underlying documents. And those can be dependent upon the Incoterms, will be lorry receipt, customer acknowledgement, for example, GRN by customer, etc. And then we will have to take comfort that whether the auto ancillary company has appropriately recognized revenue in the correct period. And the other alternative procedure to be able to take comfort on that can be confirmations of accounts receivable. So I have used March 31, 2024, because as of now, we are in the process of doing the audits of that for private limited companies. So if we get response on the confirmations of accounts receivable, then that will also give us comfort on the appropriate recording of sales in the correct period. Having said that, we should not, that is not an alternative to doing cutoff testing. That should also be done in addition to the accounts receivable confirmation procedures. So maybe I will take a pause here, and maybe Siddharth or Arushi, if there are any questions on the substantive procedures, then happy to answer that.
Siddharthi, any question relating to substantive procedures?
Yes, sir. Yes, sir.
Please,
So
kindly go ahead.
this is a question with regard to cutoff procedures and recording of inventories in our books. Since these companies follow a JIT system of accounting, so how do you decide that this inventory belongs to us and this inventory belongs to the, say, the buyer? I mean, what is the criteria by which the risk is, when does the risk transfer from us to the buyer? How do we record that inventory cutoff procedure in our books?
So in terms of when you said revenue and inventory both, so there, it is not a one size one answer that will be applicable to all revenue contracts. It will depend upon the terms of the specific agreement between the seller and the buyer. And because as far as NDS is concerned, one has to see that transfer of control, and earlier it was risk and rewards getting transferred, so transfer of control. And depending upon when is the control getting transferred as per specific agreements, then accordingly we will have to take comfort on appropriate recording of revenue and inventory in that specific period. So who owns the inventory and whether revenue should be recorded is specifically determined basis the specific agreements. So it is case by case basis by reading of contracts. And that is how the company also does the assessment. And as auditors, once we are doing that, we should take comfort on that by auditing the relevant agreements and seeing the relevant terms and conditions.
Got it, ma'am. Thank you. Now, one more question. In the industry, how do you manage customer risk? Since we'll be supplying to a limited number of customers, say a Maruti or a Honda or another company, uh, how, as an auditor, can we really manage that risk? Or what are the substantive procedure or other procedures that we can perform to manage that risk?
So are you saying that when it is limited customers, are you talking of going concern issues?
Yes, ma'am. Yes, ma'am. Say
So if yeah, so
there's a
it depends.
technological change.
Yeah. So if there's a technology change, then, like, for example, if there's a technology change, then as I mentioned in one of my slides was the entire impairment assessment is one element. But if the company is not able to adapt to the technology change, then, the customers that they are dealing with, if the customers, for example, if the company X is dealing with Maruti, and Maruti has told them that no diesel cars and only electric cars, and they will, if they're not able to adapt to that, then the business from Maruti comes into question. Then accordingly we will have to see the forecasts or alternatives which the company has, and thereafter take comfort on the going concern assumption. So it will depend upon how are they able to adapt to that, and what are the alternatives which are available with the company, alternative sources of revenue available with the company, whether they will be able to sustain with that, whether they will be able to sustain with that in terms of their cash flows, and in terms of their business. It will depend on how they do that. So we also look at that as auditors. So both going concern as well as impairment.
Okay. Thank you, ma'am.
I want to ask one thing, like, if we talk about capitalization of,
Sorry, I'm not able to hear you. You will have to be a bit louder.
I want to ask, okay, if we are talking about the capitalization
Ma'am, you are still not audible.
am I audible now?
Yes, yes.
Okay, so I want to ask when we are checking the capitalization of development costs, so do we need to ask the management that before starting the plan of development, they have set any budget or not? And do we need to check whether that budget is inconsistent with the actual cost that came out?
So there, you should ask that what is the cost which is expected to be capitalized in terms of development, because otherwise, it will be difficult for us to take comfort on the completeness and accordingly occurrence of that development cost. And actual versus budget, you will be able to see for this year only later. But how you can take comfort on budget is look back procedures by seeing that what has been the past trend, that how accurate has management been in terms of their budgeting. If in the past actual versus budget has been largely in line, then you can take comfort on the current year's budget also. And obviously, once they have done the current year's development, then you can compare with budget. If there is a significant deviation, again ask questions. If there is no significant deviation, then accordingly you can take comfort.
Okay, ma'am.
Okay.
You go ahead with your presentation.
Sure. Thank you. So, section 6 will be a very important section in terms of key estimates. If you've seen the financial statements of any company, there is a section on critical estimates. And as auditors, we should take comfort on what all are the critical estimates being made by the auto ancillary company. We should have a detailed understanding of the basis so that then we can accordingly audit those estimates. And some of the illustrative critical estimates in an auto ancillary company I've highlighted on the slide. One is the entire price provisioning. So I spoke about that in the earlier slides. That is based on negotiation with customers. There can be efficiency discounts, volume discounts, price settlements, etc. So one should see that how is the auto ancillary company making provisioning of that in the books, and then we should underlying working we should also audit along with the correspondences with the customers and the available documents. We should look at to be able to take comfort on the adequacy of provisioning. We can again look at what was the last year's provisioning and what was the actual against that. Then the other important estimate can be impairment of investments. So we have seen that in the auto ancillary segment, there is a lot of expansion, and the companies are making significant acquisitions for growth. So if there are subsidiaries, etc., which are there in the setup, then accordingly one should see that those are being tested for impairment on an annual basis. And again, the process for auditing impairment will be similar that I have discussed. We should look at significant assumptions, engage with our internal experts, and then test the impairment working in detail. And depreciation, I will not touch upon again. We've already spoken about that in the previous slide, and so is warranty. Litigations can be another key element, like, for example, if there are any product recalls, there can be litigations. If there are significant industry-wide issues, there can be litigations, and there can be demands from authorities. So one should keep a tab on the industry-wide issues and accordingly see that how has the management assessed its impact on the company, and accordingly recorded the necessary provision or contingent liability, or have they taken the relevant opinions from the relevant experts. And then we should also engage with our internal experts to be able to audit that assessment done by the management. And uh, continuing with that, when we are doing the reporting considerations, so one was critical estimates, which we will see that whether disclosures are appropriately made in the financial statements. In terms of our auditor's report, depending upon the outcome of this audit, if there are any modifications, EOMs, etc., that we come across, obviously that will have an impact on the auditor's report. But the other key element is key audit matters. So key audit matters, this is only, few companies which we have specified on the slide, but there can be many more. But generally, key audit matters which we have seen in auto ancillary companies are, for example, around these topics which I specifically covered. Like, for example, around valuation of inventories, around the impairment assessment of property, plant, equipment, if there are any significant judgments involved in capitalization of property, plant, equipment, any specific litigations which have impacted that particular company. Then revenue is another area where there have been key audit matters around recording the price adjustments, for example, their impact on revenue recognition, because that's a very important area in a auto ancillary company. And then is if there are any factoring arrangements, then there have been key audit matters around derecognition of trade receivables under the factoring facilities. If there are any specific expected credit loss with investments being made, if there are any expected credit loss for loans and guarantees of that is one of the key audit matters. So these are only illustrative, but what we wanted to highlight is that general themes are around property, plant, equipment, inventories, litigations, revenue, and with expansion happening, basically impairment and ECL. Those are the general key audit matters which are generally, if we go around reading the annual reports, and there can be many more. But these are areas of focus which one should consider while auditing the auto ancillary companies. And the only word of caution is these are only illustrative, and there can be many more procedures depending on specific situations of that particular audit. So one should accordingly keep an open mind and accordingly devise the necessary audit procedures. So that is all that we had. Any specific questions on key audit matters or estimates? Happy to take that as well.
I mean, the industry is PLI being subjected to income tax and GST.
So PLI, see, industry PLI as of now is again, people will be availing that gradually the certifications are happening. Having said that, from a tax and GST perspective, I will have to evaluate that because I am not specializing in that. But we do certification of PLI and the necessary disclosures. So maybe I can get back to you on the GST and the tax element.
Pranay touched upon this industry being prone to a lot of related party transactions happening. Say, after an audit, certain related party transactions were to come to light and they have not been reported in our financial statements. What steps or what action should we take as an auditor post our audit report has been issued and we come to know about certain related party transactions not being reported in the financials?
So related party transactions, there is a lot of focus from the regulators on that. So it is our responsibilities as auditors also to ensure completeness. Having said that, if your question is that if certain transactions have got missed and those are material transactions, then there is then it is a material impact and misstatement in terms of financial statements, right? So then, the entire question of true and fair of the auditor's report can come into question and can have a wider implication in terms of if it is very, very significant, then one can accordingly think about recalling of report, etc. also. But I haven't seen that practically because we do a lot of exhaustive procedures in terms of ensuring the related party completeness, because our clients obtain intercompany confirmations and we do independent confirmations. We do ensure completeness of the list. So, what you are talking of is a hypothetical situation, but hypothetically it can happen. And if it is very, very material, it will have an impact on the entire report only, the auditor's report and the financial statements. So then one will have to discuss with the audit committee, those charged with governance, and accordingly take the necessary action.
I have one more question from the audience. What is the size profile of the ancillary industry, medium or small? By definition, these MSMEs are frugal in resources and hence cannot deploy complicated internal control systems necessitating application of substantive procedures as described by you. Will application of tests to evaluate IFR or ICOFAR far-fetched as they are operating with minimal resources and question of going concern is addressed on a daily basis?
So I think the question is that because many of them are not having the ability of having robust controls. So accordingly, what the audience is saying that one will have to fall back on substantive procedures. So obviously as auditors, we will once we have an understanding of the risk of material misstatement, if the controls are not in place, when we evaluate design and operating effectiveness, if the controls are not in place and we don't get the relevant assurance from testing of controls, then they are right that we will have to fall back on the substantive procedures. Then accordingly the level of assurance will have to be determined. Having said that, if internal financial controls reporting is applicable, and if controls are not in place, then it has an impact on the IFC report. Because then accordingly, you will have to accordingly evaluate whether it's a disclaimer, whether it is a modification of IFC report. And there is some echo. And then, depending upon the modification of the IFC report, it can have implications on the main audit report also. So, substantive procedures, one will have to see that if substantive procedures are performed at that level, and if we take comfort on substantive procedures, then those are accordingly getting to such a level that we are comfortable with true and fair reporting on the financial statements. But IFC will be a problem.
There's another question. What specific points to be checked in this sector other than normal audit points can you list out? So we've already touched on a lot of specific points, but do you want to summarize in a concise manner for our audience?
Yeah, maybe I will summarize. So we've covered a lot of points. So the focus areas, if I may summarize, are property, plant, equipment, in which we will have to see the entire, one is tooling, how is it accounted for in terms of depreciation, useful life, and depreciation methods. In terms of development cost is another key area. So it's capitalization, inventories, adequacy of provision for inventories because of technology changes, etc. Impairment assessment with all the impact on sales, profitability, technology. Impairment assessment is another key area. Revenue recognition will be one of the key areas, and legislation and government incentives. So these areas are very, very important. In India, there are so many legislations and government incentives, like, for example, PLI, as you spoke, Siddharth. Yeah, any other government incentives, how are they being accounted for? So primarily, these areas will be key focus areas for a auto ancillary company's audit.
Thank you, ma'am. Arushi, do you have any questions?
Yeah, ma'am, like you said that the problem in IFC report will automatically have an impact on my audit report, main audit report. So will it affect my financial report also, the financial results and financial statements also?
So one correction on that, Arushi. So I said that, depending on IFC report, uh, I did not say that it has an automatic impact, but I said that one will have to evaluate impact on the main audit report. So
Okay.
if by way of substantive procedures, we are able to get enough comfort to be able to give a clean report on the financial statements, then obviously it does not have an impact. But what it warrants is that if there is a disclaimer modification in the IFC report, it warrants assessment of impact on the main audit report.
Okay, ma'am.
Is Anilji with us? So, ma'am, thank you so much for your wonderful deliberations. Let me just put in a vote of thanks. I would like to thank both our speakers, CA Pranay Gupta ji and CA Sonika Burman ji, who deliberated about the key considerations in audit of auto ancillary sector in India, and also patiently answered the queries of our audience. I also take this opportunity to thank Sri Sanjeev Singhal ji, Chairman AASB of ICI, Sri Vishal Doshi ji, Vice Chairman AASB of ICI, and the Institute of Chartered Accountants of India for providing us a platform for conducting this informative webinar. Thank you all for joining us.
Thank you so much, sir. Thank you so much, uh, Siddharth ji. Can you hear me?
Yes, sir. Yes, sir.
Thank you so much for wonderfully coordinating this today's webinar along with Madam Marushi ji. And I, on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, extend my heartiest thanks towards CA Pranay Gupta ji and Madam Sonika Barman ji for the wonderful deliberation. And they have taken their respective parts relating to the audit of auto ancillary sector and justified with their presentation. I have gained a lot. I hope I have joined very less due to the some urgency, but I hope my participants have our participants have gained a lot through your deliberation. And on behalf of once again on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I extend my heartiest thanks towards both the learned speakers for their valuable time and enlighten all our members towards various intricacies on the audit auto ancillary sector. Thank you so much, Pranay ji. Thank you so much, Sonika Barman ji. And I also thanks towards both the learned moderators, Shri Siddharth Kejriwal ji and Madam Arushi Gupta ji, for wonderfully coordinating. I also thanks all the participants of today's webinar. So now it's we are going to close the webinar. Thank you so much. Good evening.
Thank you, sir. Thank you, ma'am.
Thank you very much.
Thank you, Pranay ji. Thank you, Sonika ma'am. Thank you.
Thank you.
Yes, please.